I'm still expecting Omega very soon. We're already seeing God candles very regularly. The supply is dwindling, and I think that has to reconcile itself eventually. There are only 21 million coins. Several million are probably lost. Sailor has 500k. The ETFs have 1 point something million. And then Cynthia Lummis wants to buy 1 million. And if they launch the bit bonds, that's $200 billion of Bitcoin, which is some 3 million some odd Bitcoin that they want to buy. That's really not sustainable. And even if you look at Sailor alone, he's taken off multiple times the amount of Bitcoin that will be mined this year. Just him alone, not counting everybody else. So Bitcoin is really already deflationary if you look at it from that perspective. So it just doesn't compute. And I think when things like this don't compute, it means that there's going to be a very fast reconciliation at some point, which is the Omega candle and a fast run to 1 million.
Samson Mow begins by addressing the ongoing market uncertainty and how Bitcoin fits into the bigger picture. He explains that while Bitcoin sometimes correlates with traditional financial markets, it ultimately breaks free and outperforms. This decoupling has happened multiple times, which is why Bitcoin is trading at $80,000 today, while the S&P 500 remains at a fraction of that growth. Right now, there's fear surrounding various macroeconomic factors: tariffs imposed by the Trump administration, aggressive monetary policy shifts, and efforts to lower interest rates on 10-year Treasury bonds. These moves are destabilizing stock markets, pushing investors toward bonds. But Bitcoin, Mow argues, should be recognized as the ultimate safe haven asset. The issue? Most investors still don't fully grasp this reality, leading to price stagnation in the short term.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
There is a huge information gap here that we have that the rest of the market doesn't have. But in terms of the price behavior right now, I would say it's just a fear of uncertainty. It's not necessarily about Bitcoin. We are correlated sometimes with the traditional markets, and it can be frustrating, but we always break from it. You know, we correlate for a while and then we break. That's why we're at 80,000 today and not at whatever the S&P is at, right? We do go up against against everything. But right now there's a lot of fear about tariffs, one. Two is just what is going to happen next, because the Trump administration, they're moving very quickly and they're just seemingly, trying to fix things in a very rough manner, right? And then there is three, the effort to lower interest rates on 10-year T-bills, and that's really just trashing the stock market, right? To make people invest in bonds. So there's just so much at play in terms of the macroeconomic, securities landscape alone, that I think that's bringing us down with it. And you compound that by the fact that people don't fully understand that Bitcoin is the safe haven, and you can kind of see this price stagnation. I'm still expecting Omega very soon, and there are direct parallels to the Weimar mark when it was dying, that you started seeing very wild swings. It would go from single-digit percentages to double, then triple, and then negative when there was government interventions, and then up 100%, and then back down to single digits and thousands. So we're already seeing God candles very regularly, and I see people critiquing and saying, well, where's your God candle? But there have been 8 or 9 of them so far. We're seeing more volatility because Bitcoin is more valuable, so the swings are bigger now. It's just like when Bitcoin was at 1,000, right? When you had a $100 swing, it's like, wow, that's crazy. And now it's normal. It's like you don't even notice it. But we're seeing $10,000 swings, and then eventually it goes to $100,000 swings. So the Omega thesis is still very valid, and I think it is still coming. And what worries me, or I don't know if worry is the right word, but what concerns me is we're not getting that slow and steady rise, which means the rise is going to be far more violent, simply because we're not going up gradually, right? And if it's not gradually, then it's sudden. And I don't think we're going to go to 58K, but as you said, anything can happen in Bitcoin. But it's not that likely, and the reason is the composition of the hodler has changed. The structural composition has changed. It's not just like you and me and Adam Back now. It is institutions holding MicroStrategy, like pension funds holding ETFs, investors in ETFs that have it in their Roth IRA or other investment vehicles that they're probably not going to touch. So it's a very different beast now than it was a few years back, right? You have people that bought IBIT, I don't know, let's say at 50 some odd dollars, or they bought IBIT when it launched at 20 some odd dollars, right? Like, are they going to sell IBIT when it goes to 12 if there was a big drawdown? Probably not, right? For them, it's a different sort of unit bias. It's like 50 to 20, not from 50 to whatever, right? So they're less likely to sell, first of all, and then they're less likely to sell when it drops because it's less scary for them because it's a different numbering system, so to speak. The masses will be interested in Bitcoin when it's at 200, 300, 500K. And that's very normal, right? If you look at how ordinary people think, it's just like I see someone panicking and then I panic. There's very little foresight and planning ahead and doing research because everyone's busy with bread and circuses, right? And that's just how human civilization has evolved. And I think we're still in that very small minority, which we did the research and we went down the rabbit hole and we're listening to the Bitcoin podcast with Walker and everything like that. And yeah, you're very early if you're listening to this. And people seem to think they're not early because Bitcoin is at 80K or it went up to 108. But I still think we're very early because go back to that test again. Go to your coffee shop and ask them how much they know. The other thing I think is a very big component of it is people think that there's more supply than there is because, we always say that there's only 21 million. The supply on the exchanges is going down. But then the counterpoint I see shot back is, well, then why is the price dropping? Right? But this has nothing to do with the supply. It's just people have to sell sometimes for various reasons. They could be liquidated. They could be deleveraging. They could be doing any number of things, or they're just panicking plainly. But the supply is dwindling, and I think that has to reconcile itself eventually. There are only 21 million coins. Several million are probably lost. Sailor has 500K. The ETFs have 1 point something million. And then Cynthia Lummis wants to buy 1 million. And if they launch the Bit bonds, the ones designed by, sorry, I forgot the name, but the one for issuing $2 trillion of debt with 10% allocated to Bitcoin, that's $200 billion of Bitcoin, which is some 3 million some odd Bitcoin that they want to buy. That's really not sustainable. And even if you look at Sailor alone, he's taken off multiple times the amount of Bitcoin that will be mined this year. Just him alone, not counting everybody else. So Bitcoin is really already deflationary if you look at it from that perspective. So it just doesn't compute. And I think when things like this don't compute, it means that there's going to be a very fast reconciliation at some point, which is the Omega candle and a fast run to 1 million.
Mow also touches on a fascinating proposal issuing U.S. government debt backed by Bitcoin. This concept mirrors El Salvador's Bitcoin bonds, but at a much larger scale. The proposal suggests allocating 10% of a $2 trillion debt issuance to Bitcoin, securing U.S. debt with a truly scarce asset. If implemented, this would be a game changer. it would reinforce Bitcoin's legitimacy as a monetary reserve asset, attract even more institutional investment, and potentially force other countries to follow suit. However, it could also disrupt smaller nations' ability to issue Bitcoin bonds, as U.S. debt remains the global benchmark.
Right. So the proposal was for the U.S. government to issue debt that is backed by Bitcoin, 10% allocated to Bitcoin, and you get paid 1% interest. And there is a boost in the coupon payment up to 4.5%, I believe, and that's capped off with the Bitcoin gains. And it's just a way to secure U.S. debt with Bitcoin, similar to the Bitcoin bonds that I designed for El Salvador. But I think it's a very different beast if the U.S. is issuing Bitcoin-backed debt compared to a developing country. It actually may preclude the ability for any developing nation to issue a Bitcoin bond at this point, because U.S. debt is the safest debt, right? It's from the money printer itself. It's not a derivative, and it's very hard to default on that debt. So it's like, in terms of Bitcoin bonds, that's like AAA rated, right? Then everything else is downstream of that. But I think it's a valid strategy, and it's probably the most reasonable thing the U.S. could do at this point. Maybe I would increase it from 10 to 20%, but we'll see what happens. I think this is further out there. The Bitcoin bill will likely pass first, creating the reserve, and then this will probably come later. But everything seems to happen faster these days, so who knows? I think it has a lot to do with how the audits of Fort Knox goes, or if there is an audit. If the audit comes back that there is not enough gold, the gold's not all there, I believe we'll see this sort of game play out where gold is demonetized in favor of Bitcoin, simply for that reason that you outlined. I think Saylor said the same thing, that you can kind of like take out your enemies that have been buying gold by dumping gold and buying Bitcoin, especially if you have more Bitcoin, right? So it's just a balance. Like, does the US have more Bitcoin or more gold? And do they see the Bitcoin as more valuable or the gold as more valuable? And I think another thing that we forgot to talk about the EO was this will now allow us to actually figure out exactly how much Bitcoin the US has, because there's a number that's often thrown out there of 200 to 220,000 Bitcoin. 95,000 is going back to Bitfinex, and the rest we don't know. The US Marshals have kind of said we don't know. So the biggest thing I think for the EO is really that we're going to find out exactly how much they have, and that might lead to us finding out how much everyone else has, because every number out there is largely an estimate or approximation. Because China too, like right now, if you're going by general public disclosures, the US has less than China. China has 194,000. But there are also theories that China sold it, because there are some announcements in Chinese news that they disposed of some crypto assets. They didn't say Bitcoin, but they said we will dispose so much $billion of yuan, and this much billions of yuan, and this department will dispose this much. But we don't know. But if the U.S. comes out and says, here's our attestation, here's a signed message from the key that controls this, then I think other countries will start to need to verify how much they have. Otherwise, you don't really believe that at this point. Trust in government is at an all-time low globally. So I think there will be a race for more transparency, which is good for everybody.
Mow speculates that the U.S. government may soon face a decision: continue backing debt with gold or shift toward Bitcoin. If an audit of Fort Knox reveals insufficient gold reserves, the government might pivot to Bitcoin as a more reliable asset. This shift could even lead to gold being demonetized in favor of Bitcoin. Additionally, the Bitcoin Executive Order, EO, may force greater transparency about how much Bitcoin governments actually hold. Current estimates suggest the U.S. owns around 220,000 Bitcoin, but exact numbers remain uncertain. If the EO mandates official disclosures, it could trigger a domino effect, pushing other nations to reveal their Bitcoin holdings. This newfound transparency could further validate Bitcoin's role as a global reserve asset and accelerate adoption at the state level. Please like and subscribe.